Welcome to the Techno Fundamental Report for November the 13th. The greatest deception men suffer is from their own opinions. When it comes to the stock market, your opinion really doesn't matter. The market doesn't care about me. The market doesn't care about you. You got to be careful about having opinions because you get locked into a certain way of thinking. Just 3% of companies generated all the net wealth in the U.S. stock market since 1926. I think this is absolutely fascinating. All the net wealth in the U.S. stock market since 1926 has been generated by just 3.44% of the companies. So I've seen other studies to the same effect. And so what it really boils down to is that broad diversification sounds great, but then you end up watering down the other 97% with the 3% you're trying to find. So you got to find the Walmarts, you got to find the Microsofts, you got to find the Home Depots, etc. It's a very concentrated market, and you have to find the ones that are going to be the leaders. The data center borrowing has really picked up. So if you look, for example, at Oracle or Meta or RPLDCI, these are loans that are being made to build these data centers. So the estimates are that these hyperscalers in the billions will be spending $518 billion more currently than they were spending in 2025. So it's definitely an area that there's a lot of tech spending which is holding the economy up. So let's just take a look at the market. Let's see here. What I've got set up here is the 50-day, the 21-day, and the 200-day. And we're well above the 200-day. So the market is definitely in an uptrend, kind of struggling a little bit here in the last week. Last week was a difficult week. The S&P, kind of the same thing. We're seeing it's above the moving average in an uptrend. So continue to stay steady, but it is looking a little, this pullback here was a little bit troubling, but let's just see how things work out. Now we'll talk a little bit more about that as we get into it. The primary trend continues to be up. We're above the 200-day on the S&P, and we're above the 200-day on the NASDAQ. So primary trend continues higher. Aggression index, I was saying last week, I said, this looks a little extended. We have gotten somewhat of a pullback here in comparing the NASDAQ to the consumer staples, but it's still holding above the moving averages and is an uptrend, just got a little extended. Interest rates continue to be stable. This is the 5-year Treasury note. You can see trading around 3.7. We are below zero on the power index, which means for the last 125 trading days, interest rates have actually dropped almost 10%. So interest rates continue to be steady. Volatility index, the VIX, we got a big spike, back towards the middle of October. Now we've settled down and we're starting to stabilize in here, so volatility has somewhat normalized. The price of oil continues in a downtrend. I mean, it's below $60 a barrel. We're down to $58.43, but the price of oil continues to be in a downtrend, which I think is a positive. New lows have been a problem. We got a big spike in new lows here recently, starting to settle down a little bit as of today. But new lows have been, really getting up there, which is telling us that the sellers have kind of come into this market, but hopefully that's going to settle down. Now let's just take a look at some of the AI stocks because they're starting to show weakness. This is Meta, which is the old Facebook, really in a serious downtrend. Does not look good at all, so just be aware of that. Microsoft, kind of the same story. We've gotten a major sell-off in Microsoft, starting to stabilize, but this group continues to have trouble. So, where the generals lead, the troops follow. NVIDIA, same kind of story. It's pulled back, starting to stabilize a little bit. Not in serious trouble, not like a big meltdown or anything, but I'm just saying that this group of stocks is starting to show a little bit of exhaustion. This is Oracle, same story. You can see a definite downtrend. So the bottom line here is that the stocks that were leading this market coming into this particular correction are now starting to show some serious weakness. So I think it's time to be looking for names outside of technology, which we are finding, but it's definitely a group that is starting to show some weakness. If you have any questions, please let me know. Thank you very much.